Globally, if you look at mutual fund markets, is that an ETF? Right?
The active fund industry is huge all across the world.
But ETF is still...
ETF is growing, right? ETF is much...
I think ETF is still the largest.
Yeah, so ETF is growing big time, has grown big time, but active investment industry in US is also pretty huge.
Right. But in India, we do not see fund houses promoting ETFs. Of course, you have the CPSC ETF which did pretty well. I mean, Biocritic. So that did pretty well in the latest offering. Why is it that the industry is averse towards?
It depends on how well the active industry has done.
Okay.
If you see the long-term record of the active fund managers, it has been a fantastic. If you see my funds returns over a period of time, the long-term performance of most good fund houses has been very good. So if people can get more returns by investing in active, why would they invest in passive?
Some industry people, very senior level people, they say that honeymoon phase for Indian fund industry may be over because of all these structural changes and in the economy itself. There's so many disruptions happening, that probably across industries has got into the pricing power of companies. And now value investing is something, it's becoming tough, and alpha generation is something which is probably, even given the SEBI mandate and very strict regulations. People say maybe 5 years, 10 years down the line, mutual fund and equity fund management will become more of a passive.
Let's see, till now we have done well, and I believe this is like current market is clearly a stock picker's market. Yeah. It's a stock market picker's delight, right? So if we pick up our stocks well, then I can, and time will tell. There's no point in me guessing. I would say my past track record is good, so look at me, and that I will always say. I understand there is a vested interest for me in saying that, but I feel that if the stock picking is done well in the current market, right, it gives fantastic opportunities because there are some stocks. If you see, look at the current market, there are some 5 or 10 in Nifty, in the top 50 stocks. There are some 5 or 7 stocks which are majorly overpriced, and the rest are not overpriced. So it's a very fair market.
This morning I am looking at the data. Nifty is almost near all-time high, and only 5 of the Nifty stocks are near all-time high.
This is exactly what I am trying to say. So we as a company avoid those stocks. We believe in the next 3 years some other stocks will make more money. Like if you look at a very laggard sector like the power sector, which has not done anything. If you see some of the government companies in those sectors are brilliant investments to do. They are available in single digit. They have got 4 to 5% dividend yield. Right, the industry is growing. And in fact, the guidelines are very clear how the profitability will move in the coming future.
But stocks like Coal India is lagging because repeatedly government is.
I won't stop to discuss individual stock, but as power sector, I feel there are some brilliant companies that the government of India has, which are valued in single digit, and they have got a very powerful dividend yield. So I think I believe that it is a brilliant time to invest in government companies also, and ICICI Prudential is quite well invested in those. And I agree that last 10 years the returns are not made of that. So we love the sector more because the companies are available at the same price as they were available 7 years back or 10 years back.
So you agree that the economy, given the present structural nature changes in the economy, where we are seeing disruptions across industries, and somebody recently put out a report saying that Nifty no longer is reflecting the economic growth. So it's becoming more challenging. You agree with that?
I would say it is becoming more and more interesting. It is nothing because there are various phases. I have spent now 11.5 years with this company. So every quarter is a different quarter. Every economic situation is a different economic situation. So there is no one. Every quarter is different. So today's phase, I can say that with the domestic funds showing lower inflows, mutual funds getting lower inflows, and foreign money coming in, suddenly the market has gone up. Right? When did we see this phase? Between 2010 and 2014, that was the phase. Foreigners would come in, the markets would suddenly go up. Foreigners would go out, the markets would suddenly go down. So maybe we are seeing, if the mutual fund inflows slow down, then maybe we are seeing that phase of market again where volatility will increase big time. Foreigners will bring in volatility all the time. If mutual funds inflows go down, then it is a very interesting and a very different way of making money. Then volatility funds will make a lot of money. So I feel that this dynamic asset allocation category, the balance advantage category, is here to stay.
So far, the flow that you are seeing is mostly, if you see a city-wise breakup, probably it's from big cities. How do you want to tap going beyond? Maybe we keep talking about B50,
B30 now.
B30.
I think SEBI has done a brilliant job of ensuring that the smaller markets, there is a lot of enthusiasm to invest in this one. So the market is continuously growing in the smaller towns. We as ICICI Prudential are there in more than 300 towns of India. Right? So it is no longer true that the money comes only from the bigger towns. Smaller towns, in fact, for me business-wise, the smaller towns are much more efficient. And I don't have any hesitation if my Kerala guy says that he wants to open 5 more branches. I'm very happy to give him, because there is it is a good business that mutual fund Sahi as campaign has taken mutual funds to the smaller towns of India. So it's availability of mutual funds and distribution. The biggest challenge in the next 3 years will be how will we reach the common man of India. There are only, after so many years, there are only less than 2 crore investors who have invested in mutual funds. Right? I believe if the availability is there, if we are able to take mutual funds to the last guy, tomorrow morning, if I have done some top-down and bottom-up analysis on this, that based on the balances that people already have in their account and their earning potential and all put together, tomorrow morning, if you give an option, if you are able to distribute a mutual fund effectively, instead of 2 crores, there will be 5 crore Indians who would be invested in mutual funds. It's our ability to reach the last mile. So the distribution needs to be extremely strengthened. And if we make onboarding of new customers easy, then mutual fund is the sky is the limit.